Welcome to a new episode of Global Investment Search. My name is Vicky. Today we share a Finnish stock that is also listed in the US, Nokia. For Finland, its stock code is Nokia, NOKIA, and for the US, it is NOK, NOK. We received the questions from our viewers on how we view Nokia currently as a changing business. Before we start, thank you for clicking into our channel. Please like and subscribe for more content. We share our insights on global multi-asset management through our English video bi-weekly. We know that Nokia is well known for its mobile phones, especially the iconic Nokia 3310 in the 2000s. It is famous for being unbreakable. But actually, Nokia is a shifting business now and is going through a rebranding phase. We think that there is actually more possibility to this company than people have noticed, especially when the theme of metaverse is so hyped up now. In their recent press release, they have also mentioned that it is time to ride on new 6G technologies and work towards metaverse. They no longer want to miss another opportunity to expand and innovate. Our fund manager Andy thinks that in the past few years, Nokia has actually spent a lot of effort in rebranding and designing their products to fit into the metaverse direction. It wants to rebrand itself from the stereotype of a mobile phone and, as they said, reset. To do that, Nokia has been prioritizing more R&D and less of the consumer sector such as smartphones and TV. Now, it is an accelerating phase and hope to revamp the company's operations. The next phase in the future is called scale, in which they hope to penetrate more markets such as for 6G. Currently, Nokia has a market capitalization of around 28 billion euros. It has a PE ratios of approximately 14, which is not high. From this slide, you can see that they have businesses around the world, primarily in North America and Europe. In terms of segments, there are mobile networks, network infrastructure, cloud and network services, and Nokia technologies, in which the mobile network sector is the largest. We guess Nokia is trying to penetrate the market through introducing 6G phones and devices, which explains perfectly that mobile network has the largest portion of the pie chart. From this segment, you can tell that there is an ecosystem forming together and is more business-to-business oriented. To make it sound less vague, an example would be that they aim to be a digital infrastructure provider of a commercial space. We think that the lowest time of Nokia has passed. Even Moody's opinion on Nokia went from stable to positive. We think this is because people have realized that Nokia has restructured. Currently, we are looking at 5G developments of Nokia, even paving the way for 6G. For time-wise, we studied that the growth of 5G will peak at 2028. Onwards, 6G will pick up by that time. But before the service becomes globally applicable, there needs to be a boom in 5G infrastructure. And analysts think that 2022 to 2023 will be the prime time for that. Therefore, it is why we think that Nokia has a very good potential to catch on to that trend. There is actually a lot going on in Nokia, but hopefully a few images will help clear your minds on what they are up to. In the recent 2 years, they have also been working on chips through acquiring chips manufacturers and designers. The network is also vastly growing, even for cloud applications. We think that investors should not underestimate Nokia. We would say right now you can treat it as a large-scale telecommunications company. According to Gartner industry reports, Nokia and Ericsson are actually both ranked as the best companies within the telecommunications industry. Looking at the financials on the left, the gross margin graph shows even though the company has been putting a lot of resources into R&D, the gross margin is still growing. We think that this is a large upside. It shows that the company is growing at a stable pace and capable way. On the right, it shows that the amount of money put into R&D is also growing. This may be a sign that the goals are actually probable and not only a storyline for investors. Let's look at technical analysis. You can tell it has surpassed the orange support line, has broken the downward trend drawing from 2015 and went through a retest in a quarter earlier. The bottom has a higher probability to be confirmed. In terms of FATA, it actually has a decent shape. It currently is not overpriced and has a full score for potential growth. Judging from both fundamental and technical analysis and our FATA model, we think this is a European stock that we will keep an eye on. If you have learned something valuable through this sharing, please don't forget to give our video a like and leave a comment down below. Thank you so much for watching. We hope to see you again soon.